let's welcome on board Mr. Nissan Joseph, Chief Executive Officer at Metro Brands, to make sense of the Q4 performance, because this time around we saw revenue growth of 26% and the margins also increased in the quarter gone by. Mr. Joseph, hi, good morning. Now, given the wedding season and offices, colleges opening up, etc., we saw good performance come by from Q4. But how's Q1 trending? What's the expectation from the quarter one of FY23?
So I think as much as people from the outside looking in might think Q4 was a layup, it came with its own set of challenges. We did have some supply chain disruptions, number one. And number two, we had a very muted January because we had the Omicron, sweeping through the countries that affected different stores at different rates, but it did affect our business. So I think the fact that Q4 was just an easy quarter is a misnomer, though we did very well, but it had its own challenges. And, these challenges will continue. Q1, we believe, should bode well so far, simply because we've hedged our inventory quite well and will continue to do so. We have a long standing group of suppliers that we work with for, in some cases, 3 generations that we're able to work closely with to monitor our input costs and to ensure that we have a steady supply. We also source very little internationally. Most of our sourcing is done in India. That further mitigates any supply chain disruption and cost increases that come from the logistics of transporting product.
Okay, Mr. Joseph, but given the inflationary trends, have you seen any sort of downtrading happening in the industry?
Yeah, so our ASPs actually grew last quarter on quarter. So we are quite optimistic that the value consumers see is good. So while I think the consumer is going to be more pinched, I think what they're going to seek is value. And what Metro Brands offers is great value for the products we sell. We also believe that there's a little bit more of an equalization from the unorganized market into the organized market caused by the rise of the GST for products under 1,000 rupees, which had a nice tailwind of having only 5% GST, and now it's 12%. So we see that actually as an equalizer for our business. So, I don't think it's a question of, obviously there is going to be some consumer demand issues. However, what we believe that means is the consumer is going to seek value for their money, and Metro Brands is always stood for offering value for money, whether it's in all of our concepts, whether it's in Metro, Mochi, Walkway, or Crocs.
Mr. Joseph, what's been the price hike that you've undertaken so far? Will you be able to take further price hikes given that most of the products are in the premium range?
Yeah, I think what we guided to was the potential for cost increases up to 15%, right? And I think we're being cautious about it, and we're being prudent about planning for those kind of cost increases. Needless to say, we will be working very closely with our supply chain, very closely with our suppliers to ensure that we mitigate as much of those costs as we can, whether it be through more efficient buying, whether it be through consolidation of raw materials, and not the least of it, for more effective use of inventory, right? So we think we'll be able to mitigate it, but we as a business have always been financially very prudent. Though we have deep operational rigor, our financial discipline ensures that we plan for things adequately. So the guidance we gave was really more of a guidance, as opposed to we're saying that we will have 15% increases, but we're planning for it, and we would continue to monitor, any demand erosion we may see. But so far, we've been able to increase our prices. I said our ASPs were up, double digits. We have increased our prices about single digits over the last quarter, but we're not seeing any demand erosion from that.
What about margins? Because they have managed to expand due to the improvement in the sales mix, but you spoke of the increase in raw material prices, etc. So I wonder, are margins sustainable? What's the outlook for FY23?
Yeah, so I think we always felt confident as a business that we would come in the 55 to 56% margin range. We were in the 57% margin range, but we're very comfortable between the 55-56% margin range. And the way we do that is to ensure that we're regionally correct on products, so we get better sell-throughs. We monitor the sell-throughs of our products and quickly move products from slow-moving areas into fast-moving areas. And the biggest erosion to margins happens to be what you sell at a discounted rate. So if you're able to liquidate your product during the season, you're going to have a much better maintained margin. So the way we maintain our margins is through operational rigor of watching how our stocks are selling and working closely with our supplier base to make sure we're not buying the wrong things and we're buying more of the right things to ensure that we're selling it at the price we intend to sell it rather than at an end of season sale. So, we feel comfortable guiding to the 55-56% range, which is what Metro has achieved over the many course of its many years, despite many other headwinds that we faced in the past, whether it be demonetization or GST or even just the value of the rupee fluctuating.
Okay, Mr. Joseph, point taken. But what about your expansion plans? What's the guidance with respect to store addition this year?
Yeah, I think we are very bullish on being able to provide the goals that we set out in our RHP of 260 stores by FY25. The recent number of stores we opened, which was 75 last year, had a mixture of metro through tier 3 cities, and we're quite pleased to see that the acceptance of our different concepts in different tiers seems to be on track. So we feel optimistic not only about the fact that we will be able to achieve our goals of 260 stores by FY25, but also the fact that our strategy of going through from metros down to tier 3 has been validated even through a COVID year.
Okay, and Mr. Joseph, Monsoon is just around the corner, and that's coming as some respite after the heat wave that we have been going through. What's your own expectation from the season? How are you preparing for the same?
Actually, the monsoons bode well for us. Metro has multiple brands in its stable. Our Crocs brand does extremely well over the monsoon season, so that's always a big driver for us. We also have products in our Metro, Mochi, and Walkway stores catering to the monsoon customer. So we really see it as a selling opportunity rather than a promotional opportunity, and we've been able to capitalize on it. Obviously, the last few years, we missed out a little bit on the monsoon period because of COVID-related closures, but this year, we actually don't see monsoons as a negative that we need to put a sale. We actually prepare for it. We plan inventory for it. It is a good volume driver for us in some of our categories.
We wish you all the very best. Thanks so much for joining in and sharing with us the outlook on growth and your plans going forward.